Welcome to the deep dive. Today, we're kicking things off with a really significant development for Asia's green future.
Yeah, we're talking about Singapore's FastDP initiative.
Exactly. It's sort of an accelerator program aimed at speeding up the build-out of clean energy infrastructure, which the region really needs.
It's not just talk. Singapore's putting serious money behind this. Our mission today is to, really get into the nuts and bolts of FastT. What's it trying to do? How does it actually work? And crucially, why should you care about it for Asia's energy shift?
And that involves a pretty big number, right? US $5 billion target for mobilized funds?
That's the target. So the potential impact is, well, huge. If they hit that, you could see a real jump in renewable capacity across Southeast Asia.
And this isn't just a future plan, it's happening now. Just this week, May 7th, 2025, MAS Managing Director Chia Derjun actually announced that Singapore's started deploying its first chunk of money.
That's right, the initial US $500 million commitment. It's rolling out.
Okay, so let's rewind a bit. Where did FastDP even come from? What was the spark?
Well, it really started back at COP28, December 2023. It was basically born out of a major problem,
With?
the huge gap in climate finance in Asia, and how hard it's been to get private investors interested in decarbonization projects.
Right. That funding gap challenge.
Exactly. So the big question FastBP tries to answer is,
Yeah.
how do we unlock that money that just hasn't been flowing easily?
Okay, makes sense. And I hear it's kind of evolved since that initial launch.
It has, yeah. Since COP28, they've been busy building up their partner network, tweaking the strategy to make it more effective. Then came COP29, November 2024. That was a key moment. Minister Grace Fu formally committed Singapore's contribution
Ah, the US $500 million.
up to US $500 million, yeah, in what they call concessional funding, a really significant first step.
Concessional funding. That sounds like finance jargon, but important jargon. What exactly is it, and how does it connect to getting that bigger US $5 billion?
Okay, so this is where blended finance comes in. It's central to FastTP.
Right.
The whole idea is to mix different kinds of money together. Singapore's $500 million is that concessional piece, and the plan is for other partners to match that kind of contribution.
So it's like seed money, almost.
Kind of. Think of it as lowering the barrier to entry. Concessional funding means things like grants or loans with much better terms than you'd get commercially.
Like lower interest rates, longer payback times.
Exactly. Stuff like that. The point is to make these clean energy projects look less risky,
Ah, okay.
because commercial investors, they might hesitate, right? Worried about profits or risk, especially early on.
Makes sense.
So this concessional capital acts as a cushion, makes it more attractive. The goal is that this initial $500 million, matched by others, will then catalyze or pull in much larger amounts of commercial money, aiming for that US $5 billion total.
Got it. So the concessional bit de-risks it, drawing in the bigger private bucks. Now, FastTP works through three main pillars, strategy-wise. Can you break those down for us?
Absolutely. These pillars really show where the focus is. Pillar number one is energy transition acceleration.
Okay.
This is all about helping countries phase out coal power plants in a managed way.
The managed phase-out, right?
Yeah, replacing that with renewables. And this is critical. Building out the grid infrastructure needed to handle more clean energy.
Because the grid needs upgrading, too.
Massively.
Yeah.
And they're already moving on this with partners like the Asian Development Bank, ADB, and the Global Energy Alliance for People and Planet, or GEAPP. That's the ETF partnership.
So tackling coal and the grid, that's fundamental. What's pillar number two?
Pillar two is green investments. This one targets projects that are maybe just on the edge of being commercially viable, marginally bankable is the term.
Okay, like what kind of projects?
Things in renewable energy generation, electric mobility, think EVs, and charging sustainable water, waste management, and the circular economy.
Right.
And this is the one that's actually starting first. It's expected to get going in the next few months, here in 2025.
Ah, so this is where we'll see the first action.
Exactly. It's managed by Pentagreen Capital, with support from big names like Allied Climate Partners, the IFC, MAS itself, and Temasek. They're aiming to deploy $1 billion just through this pillar initially.
1 billion just for that pillar. Wow. Okay, and the third one?
The third pillar is industrial transformation. This is about tackling the really hard-to-abate sectors.
Like cement and steel.
Precisely. Heavy industry. This pillar focuses on providing debt financing to help these industries decarbonize their processes.
That sounds challenging.
It is,
Yeah.
which is why it involves collaboration with players like BlackRock, MAS, IFC, MUFG, NAX, and AIA. It needs that kind of targeted financial push.
Okay, three very distinct but connected pillars. Now, who's actually running this whole thing? What's the structure?
Good question. And that brings us back to this week's announcement from Temasek at MAS.
Right, the dedicated office.
Exactly. They're setting up a specific FastTP office. It'll have its own management team, and their job is to oversee deploying Singapore's $500 million across those partnerships.
So a central command post.
Pretty much. Yeah. Coordinating with all the different partners, asset managers, banks, commercial investors, concessional funders. And a big part of their role is pushing innovative blended finance deals tailored for sustainable projects in Asia.
Okay. Now, since green investments is starting first, can we drill down a bit more? What specific types of projects are they looking for?
Sure. For the Green Investments Partnership, the focus is pretty clear. First, renewable energy generation and storage.
Solar, wind.
Yep, solar, wind, and very importantly, battery storage to make that power reliable. Second, electric vehicles and the infrastructure around them.
Charging stations, grid support for EVs.
All of that. And third, sustainable water and waste management. Vital for cities. These all tie directly into Asia's needs and Singapore's own climate goals.
And the need in Asia is huge, isn't it? Give us some context there.
Oh, absolutely critical context. Chiederjean pointed out that Asia's electricity demand is set to grow by 4% per year until 2035.
4% a year. That's massive growth.
It really is. And the IEA, the International Energy Agency, reckons renewables need to meet over half of that new demand.
Oh, wow.
So the scale of clean energy investment needed is just enormous. But, as we said, getting private money is tough.
Why is that again?
Well, often there's not enough local expertise. The upfront costs are really high. Payback can take a long time. Plus, you've got regulatory risks, technology risks.
A lot of hurdles.
Definitely. And remember, Asia still gets around 85% of its energy from fossil fuels right now. So the transition is urgent, and initiatives like FastP are trying to grease the wheels.
85% fossil fuels.
Yeah.
Yeah, that really highlights the challenge. Now, FastP isn't doing this alone. You mentioned partners. Can you recap who some of the key players are?
Sure. The initial group includes Allied Climate Partners, ACP, the Asian Development Bank, ADB, the Global Energy Alliance for People and Planet, GEAPP, the IFC, and Temasek.
Quite a lineup already.
And they're also talking to others, potentially bringing in AIA Group, British International Investment, HSBC, MUFG from Japan, and NEXI, the Japanese Export Credit Agency.
So a mix of development banks, private equity, finance institutions.
Exactly. A really diverse group bringing different strengths, which is what you need for blended finance.
And how do these partners slot into the three pillars?
Okay, so for energy transition acceleration, that's the ETF partnership with ADB and GEAPP.
Right.
For green investments, the one starting now, it's managed by Pentagreen, backed by ACP, IFC, MAS, Temasek.
Got it.
And for industrial transformation, the plan involves working with BlackRock, MAS, IFC, MUFG, NEX, and AIA on that debt financing piece. So tailored partnerships for each focus area.
Okay, that clarifies the structure. We know green investments is imminent. What about the bigger picture timeline for FastEPP?
Well, green investment starting in the coming months is the big news for 2025. Setting up the dedicated FastEP office is also happening now, which is crucial.
Right.
We don't have specific project names yet for green investments, but we know the top renewables, EVs, water waste. So expect announcements there soon. The other two pillars will likely ramp up as this first one proves the model.
It sounds very positive, but surely there must be challenges or, potential roadblocks.
Oh, definitely. Chiederjean mentioned this himself. The path for climate action globally is looking a bit more uncertain lately.
How so?
Well, you see some big financial players pulling back a bit from climate alliances, or those alliances adjusting their goals. Plus, general economic uncertainty might make companies worldwide more cautious about big investments.
So, potentially less private capital flowing overall.
It's a risk. And that's exactly why FastP, with its focus on de-risking and using that concessional capital, is so important right now. It aims to keep the momentum going despite those headwinds.
You're right, trying to counteract that caution. So let's pull it all together. What are the absolute core objectives of FastEP?
Okay, summing up. Financially, the big one is mobilizing up to US $5 billion total, using Singapore's $500 million as the catalyst. Strategically, it's those three pillars: speeding up the energy transition, coal out, renewables, and grid in, boosting green investments, renewables, EVs, water waste, circular economy, and transforming heavy industry.
Got it.
And then there are the broader goals. Closing Asia's sustainable infrastructure funding gap, making sure economic growth happens alongside climate action, building climate resilience, and really connecting global promises with action on the ground in Asia, all through these diverse partnerships.
And specifically for Southeast Asia, what's the expected impact from Singapore's $500 million?
It could be really significant for Southeast Asia. That $500 million isn't just $500 million. It's designed to be matched and then leverage much, much more private money.
The multiplier effect.
Exactly. And as Ravi Menon noted previously, it directly tackles those roadblocks we talked about: lack of expertise, high costs, long paybacks, risks. It makes projects bankable.
Okay.
And the project types fit perfectly with Southeast Asia's needs: phasing out coal, fixing the grid, adding storage, scaling up solar and wind, building EV infrastructure, improving water and waste. These are critical areas.
And the funding gap in Southeast Asia is particularly large, right?
Absolutely huge. The IFC and IEA estimate the region needs something like US $208 to $244 billion a year by the early 2030s for clean energy,
Wow, compared to what's currently invested.
compared to only about US $30 billion in 2022. So FastTP's $5 billion target, while not the whole solution, is a really important start and, crucially, a model for how blended finance can work here.
A model to hopefully be copied and scaled.
That's the idea. And we're seeing the mechanisms being built. Australia's put in $50 million. Pentagreen is managing the first pillar, potentially European partners joining too, and deployment starts this year, 2025. That's key.
This has been a fantastic deep dive. FastTP really does sound like a major, well-thought-out initiative for Asia's energy transition, especially here in Southeast Asia.
It is. The blended finance angle, the strong partnerships, those seem like real strengths.
And having that green investments partnership kick off so soon is definitely exciting. We'll be watching that closely.
Absolutely. It's a bold move, recognizing the urgency and the need for creative financial solutions.
So as we finish up, here's a final thought for you, our listeners. How can initiatives like this, like FastDP, be scaled up? How can they be replicated to meet the truly vast clean energy needs across all of Asia and really help accelerate global climate action? Think about the roles everyone has to play: governments, the private sector, maybe even individuals. Something to ponder. Thanks for joining us for this deep dive.